Hello everybody and welcome to the crypto session brief. We're on Monday the 13th of March 2023. Approaching midday here in Europe. Let's take a look at crypto markets and what is moving them. Well, it's been a roller coaster of a few days or a week in crypto's case, it must be said. Started off of course with technical breakouts, then we had the Silvergate um, issues, let's call it. There's a lot of issues at the moment in financial markets, it would seem, particularly in the banking world, with Silicon Valley Bank also in a spot of trouble. That's led to a few other regional banks in the US having some trouble. Just been discussing it inside the chat rooms with Drew, but a lot of volatility in the market at the moment, and none more so than in cryptos. Um, Risk assets have actually erased some of the early gains during some of the uh, European hours as some of the shares in a San Francisco-based bank called First Republic nosedived in pre-market trading. Um, Basically, just a reflection of investor angst, let's call it, over the entire banking sector's health. We've seen equity markets in Europe, such as the DAX, down over 500 points. The UK's FTSE 100 down quite significantly over the past few hours, and First Republic Bank, like I said, down nearly 60% in pre-market trading, even as the bank said it secured additional funding through JP Morgan, giving it access to $70 billion in liquid funds. Bitcoin had been moving up over the weekend, as you can see. Had a really strong Saturday, Sunday. That was after news that the Fed and the Treasury in the US were going to be rescuing Silicon Valley Bank, and that was seen as good news. But then today we've seen some of them earlier gains faded. You've seen Bitcoin actually move back into its 50-day moving average. You can see here, just around the 22,760 area. And you've seen a rejection off that basically to a point, and now we're trading back at support at 21,850. So yeah, roller coaster few days, a lot of volatility, firstly to the downside, but then over the weekend to the upside, and then today it's just been a real mixed day so far. US authorities did announce some emergency measures yesterday to boost confidence in the banking sector, but it doesn't look like that confidence has continued through into today, it must be said. Some of the larger banks like Credit Suisse under some pressure too. They've their share prices broken to a new all-time low today, down almost 8%, 8% around half an hour ago when I last checked. Let's focus on cryptos then for now, whilst we're here, and we'll look at BTC. We've just discussed the price action actually on BTC, that 50-day moving average overhead coming into play. Ethereum as well made its way back, basically faded all of last week's losses, back above over the weekend, back above the 1550 area. In fact, we almost reached 1650, so back trading basically where we were before all the Silvergate issues. I mentioned that Ethereum had been holding up much better than BTC over the past week or so. BTC had a lot more downside volatility, but it was looking like the impact on Ethereum was coming through on Friday, albeit for the big bounce, and we haven't really seen any too much downside today either. I mean, we still are up on the actual since the start of the daily bar at 1550, so we are still up on the day, whereas BTC has just dropped into the red, as you can see. Litecoin currently at 75.65. You've seen a little bit of a bounce around the 70 region, that round number of 70 coming in quite handy to the downside. But again, is this just a dead cat bounce? Because we are starting to see some downside come back in. Let's see how the rest of the day plays out, but it's worthwhile staying in tune with the crypto chat today, or all of the chats inside the platform today, because it seems like a very fluid and ongoing situation with First Republic Bank, for example, being the latest to get hit today, and we'll have to see how that plays out, of course, in the US session. But the European session so far hasn't been too pretty as far as the banking sector is concerned. Tomorrow we've got the US CPI inflation data due, so again, quite significant. It's been interesting to see this move lower in risk as well, despite bond yields drifting lower. We've seen bonds moving higher because that flight to safety, you've seen the flow into the Swiss franc, flow into bonds. in the US in particular. So that's basically where we're at. But then you've seen equities actually moving lower, whereas the recent play has been if bond yields move higher, then it's the suggesting that the Fed are going to keep hiking higher for longer. That's been the narrative of what's been moving price and equities, etc., and US dollar. But now you're seeing the opposite occur due to this being more of a standalone event risk, with the flight to safety being into government bonds in this particular situation. So that's where we're at. That's the current state of play. Any questions, pop them inside the chat room. Thanks for listening, and all the best with your trading. Bye for now.